Welcome to the Investor Group on climate change. And I'm here with David Russell, who's the chairman of the Transition Pathways Initiative.
Morning.
Hey, thank you. Yeah, good morning. It's a fairly global organization with the amount of signatories and things you have. We're based out of London, I believe.
That's right. Two parts.
Yeah.
TPI Centre, which is the based at London School of Economics, which does analysis of companies' transition plans and the targets they're setting. And TPI Limited, which is the part I'm chair of, which is the board that owns the brand. It's an asset owner-led board.
Yeah. And are people at the top leading this because they think it's the thing to do, or from a social license to operate perspective, or all of the above? Like, what was the genesis of this?
Well, the genesis of TPI was basically the Paris COP, where the need to transition to Paris alignment, 1.5 degrees aligned by 2050 became kind of the buzzword. And as investors then, asset owners, pension funds in the UK, we were faced with how do we assess what companies are doing in that space? Because the only tool we really had at the time was carbon footprinting, which was backward looking and didn't tell us how companies were going to transition. So that's why we set up the TPI Transition Pathway Initiative, working with the London School of Economics and FTSE Russell as a data provider to set a process in place where we could assess how companies were governing their transition, but also how they were setting targets on sector-specific transition plans to get from where we are now, short, medium, long-term targets to net zero by Paris alignment by 2050. And the reason why is not because it's a good thing to do to generate loads of data. The reason why the pension funds did it is because it's in their best interest from a fiduciary perspective to have companies transition and for the world to achieve net zero Paris alignment by 2050.
Yeah, I noticed in the FAQs on the website a specific statement that this isn't about divestment. I think the concept of universal ownership, it might be a little more advanced in Europe than it is in Australia, though I'm not within the higher echelons of the industry to make that statement. Just for the people at home, could you touch on that universal ownership perspective for me?
So basically, the universal owner position is something that's been around for over 20 years now, came out of some academics in the US. Big pension funds, super funds in Australia, basically own a slice of everything everywhere. We're exposed to global equity markets, we're global debt markets, infrastructure, private equity, public equity, you name it, we invest in it in thousands of companies globally. So actually, pension funds are not tied necessarily to the individual performance of those companies, more to global GDP, global economic performance. So we have an interest to make sure that issues that could affect that global GDP, global economic performance, like climate change, should be addressed or could be addressed, because that could impact. If climate change happens as it's predicted to happen, that could impact our ability to pay the pensions, whether they're DB or DC, that we're expected to pay in 10, 20, 30, 40 years' time. So that's why taking that universal ownership view, how we should think about how we address systemic risks is useful for pension schemes.
And when people are thinking about, the world's essentially going to hell in a handbasket from a climate perspective, and we have universal owners, which is a really great term, is it almost a false prophet to look at these universal owners as somebody who can affect change when we think about basically the amount of money spent on proxy voting to influence boards, and then the fact that we hold shares in these companies, that we aren't actually the management of these companies? Should we get out of the finance industry and just go run those companies? Like, what's the...
So I think institutional owners, pension funds, asset managers, have a role to play in the transition and encouraging companies, encouraging the assets, particularly where they're real assets, where we have control to put in place the steps they need to transition. However, that's not going to happen unless the right policies are put in place by governments, whether that's in Australia, whether that's in emerging markets, other developed markets around the world. Climate change and a lot of other systemic risks, like nature and biodiversity, will require policy changes to help drive companies to do that, with their investors then influencing those companies to address those policies or implement the actions they need to address whatever the issue is. So my view is climate change in particular is a policy related issue that needs a lot of resource from, I think, investors to engage not only with the companies that they invest in, the other assets they invest in, but also to encourage policymakers in Australia, New Zealand, Hong Kong, London, you name it, to put the policies in place to address what is a global issue.
And have you had an experience of asset owners going to their member base and saying, look, there are market rate returns and we're arguably regulated to deliver you market rate returns, otherwise we're legally accountable, which is a real challenge, and why it was lovely to hear groups of people calling for more regulation. They're like, let us, give us the tools we need to go out and use the assets we have. Though, have you had experience of pension funds asking their members, hey, look, would you be willing to accept lower rate returns for us engaging in more arguably outside listed stocks, or is there just not room for asset owners to play in that space, which is traditionally like VC or sort of growth stage investors?
So I think the role of a pension fund is to pay a pension, and so we are always looking for appropriate returns for the risk we are taking. So pension funds all around the world are increasingly investing, and have been for many years now, in clean tech, in renewable energy in particular. There's huge competition for renewable energy assets in most markets around the world, because lots of investors want to put their money to work in that space as part of a diversified, risk-adjusted portfolio. So I think it's a false premise to assume you're going to lose money making these investments. Mostly you don't. Pension funds are investing in things to make the returns they need to pay their pensions. Some will have a lower return than others, but it is part of that broad portfolio.
And what are you proudest of with the Transition Pathways Initiative?
I think the fact that it's asset owner led, and that we've managed to grow from a very small organisation to now covering 1,000 companies on our management quality score, going up to 2,000 imminently, and then to many thousands in the future. Similarly, increasing our carbon performance score. We also undertake the analysis on sovereign debt now as part of the Assessing Sovereign Climate Opportunity and Risk project, ASCOR, because obviously sovereign debt and countries have to transition, as well as the companies that we hold. We also have branched out into covering banking and how banks are transitioning. We're increasing our coverage there. And that's important because banks give money to companies to do stuff. They don't give it; they lend money to companies. So they could be lending that money to either transition or not transition. And surely, from an investment perspective, if you believe the transition should be happening, understanding how the banks you hold in your portfolio are managing their transition and managing their lending books is actually quite important as well. So I think we started really small in 2016, launched in 2017. We've now got 150 supporters around the world, covering soon to be 2,000, soon to be many more thousand companies. And that's driven by the realization by asset owners that climate change and that transition need to be addressed by the investment community. And we give all that data available freely on our website, so all investors can use it.
And last two questions, I really appreciate your time. You spoke about focusing on the demand side of the equation yesterday, because during your presentation, we were discussing that 15% of oil and gas is available for stock trading, essentially. So even if we were to take over all of the oil and gas, take over is the wrong pejorative there, but in context, transition it to net zero. That's not going to make a large impact.
No.
It's necessary, but it's not,
So I think there's a strong focus in the investment sector of engaging with the publicly listed oil and gas companies. They're not the ones who produce most of the emissions. So even if we took that 15% of the market out, other national oil companies will continue to produce and provide the oil and gas we need to currently and hopefully transition over time. What's important is that we focus as investors on the demand side, those companies that are actually using the fossil fuels and causing the vast majority, the kind of 85% of emissions. Utilities, steel companies, aluminium companies,
I think
airlines.
The food sector had a massive amount of people that haven't considered a transition.
Well, if you look at agriculture, it's 15% of. Sorry, I think agriculture is about 30% of global emissions, and a sector that underreports its management of climate change and the transition. So, I think focusing on the users of energy and how they are transitioning is something that I think investors need to get better at. We tend to focus on the oil and gas companies because they're in the spotlight, and actually a lot of pressure is put on investors to focus on them. But I think focusing on the demand side, focus on the users is really
Close-up
important.
photo of soil isn't as impressive as a
No,
exploded photo of a chimney stack, but you should check out soil health. Last question, based on the last 24 months of getting this to its current state, what have you changed your mind about?
I'm going to change my mind about. But I think that demand side point is is a key thing that's come to the fore. I think that there are global coalitions of investors engaging on climate change, and I think that a shift away from a strong focus on the supply side, the oil and gas companies, to the demand side is something that realization is happening. So I think you see a lot more of engagement with the users of energy as opposed to just the producers of energy.
Yeah, wonderful. And if you haven't heard of the Transition Pathway Initiative, what are you doing? If you're in that industry, you probably have already, but I dare say there's more space to join. And if you're not sure about how you're going to communicate the transition and how you're going to lead your organization inside and outside in relation to this context, reach out and have a chat. I'd love to speak to you. Thanks so much for your time.
Thank you. Cheers.